All right. Welcome, everybody, to Market Therapy.
Hello there. Had my mute on.
That's all right. That's all right. Glad to see you, Doctor. Thanks for joining us again today.
Sure.
Uh, Interesting trading day. Hopefully things went well for you.
Well, red day for me, but not a huge red day. So
Well, it does tend to happen from time to time, and it's a lot about what we're going to be talking about today, right? The psychology of money.
yeah.
All right. Well, again, we really appreciate you being here. I'm going to introduce you. I didn't have the best picture, I guess, but Dr. Menaker is a licensed clinical psychologist with a PhD in psychologist. I love the fact that he says he's more of a stretch than a shrink, but since 1995 he's been a performance coach for many top money managers and professional traders. And what makes him so special and so important to us is that he's recognized as an experienced and successful trader himself, recognized expert in emotion management and intuitive development. If you're going to reach out to the doctor, there's his website and his Twitter handle. And introduce myself briefly. My name is John Hoagland, senior performance coach here at Topstep. And more than it's 39 years now of futures trading experience. It started trading on the trading floor more than 30 years ago, traded there for 20 years, moved to screen trading in 2009, and I had witnessed the difficulty that many of folks that friends of mine that went before me were having in completing that migration. So I really tried to unlearn and relearn trading from the screen for about a year there. But since 2011, I've been here trying to help traders develop at Topstep. And as always, we really appreciate the good doctor coming and spending a little bit of time with us. So the doctor was going to talk about the psychology of money, and I've got a little conversation starter here. Morgan Housel is one of the writers of one of the books called The Psychology of Money, and he says that doing well with money has little to do with how smart you are and a lot to do with how you behave. Doctor, so happy you're here. What do you think?
That's a great quote to start off on, really. Um, I'll just add to what Morgan also says is that really, well, I'll just give you my interpretation of it too, which is he's spot on. It's our actions, right? He's talking about it's our behavior. It's not how smart we are, it's our behavior. It's what we do. And add even more to it by saying that I've seen so many traders that are very smart, and I've seen so many traders that maybe not the smartest, and it has nothing to do with my ability to know how successful they are or they're going to be. It's really about how do they react to their experiences while they're trading. Yeah, so this is a great quote.
Awesome. So it really doesn't necessarily seem to be just the psychology of money. It's more of a relationship
Mm-hmm.
in trading that we seem to have with money. I mean, I know that I've had some barriers to what I think about money as far as, being able to successfully be profitable in trading, even at all. I mean, it goes from self-esteem to what our parents did,
Mm-hmm.
to the way we were taught about money, to the way we've seen money change people, and sometimes for the better and sometimes for the worse. um the it's it is in essence, I think, more of a as much a relationship as a psychology. What are your thoughts?
Definitely a relationship that we have with money and trading. And I'll say this too: most traders, probably all um, retail traders, get into trading because of the desire to want to make money, right? It's money that gets us into the game. And what I see all the time is that the traders who stay really attached to the dollars coming in, coming out very obsessively are often the ones who don't do so well. And so it's the irony is that, we come to trading because you want to make money, right? Lots of opportunities in the market. But the more you actually obsess about the money, it becomes a problem.
That's one of the very similar to one of the smartest traders I ever knew said to me one day. He says, if it's if it's money you're after, it's going to be very hard to come by. It's becoming a good decision maker, and here it goes
Mhm.
right back to how we behave.
Yeah.
That's going to push you through, and it seemed kind of counterintuitive at the time, but there's a lot of counterintuitive and kind of paradoxes in trading.
Yeah, it's I think it's the hardest game that one can play, most likely. Maybe there's others that I'm not aware of, but it's the hardest one I've ever tried. And I think most people would say the same. The we this whole idea of I want to make money and that's why I'm trading. Of course, that's why we get involved. The people that I see who succeed the most, yes, they do want money and they have a strong desire for money. But there's also other desires happening that are in parallel. Things like kind of what you sort of alluded to a minute ago, John. The idea of, how what's my decision making process like? How good is that? Um, because they realize that there's a direct relationship between how good their decisions are in terms of the quality, following their process, that type of thing, and how much money comes into their account and how much money comes out of their account. So it's a relationship that we easily forget, but we have to constantly remind ourselves about. It's our actions that have a lot more to do with how much money is in our account than anything else.
Yeah, he was all about his process and his decision making process. He went so far as to say that making money was a byproduct of his ability to behave in the right way, to make good trading decisions. Um, I had something I was going to say, and it slipped out of my brain.
Well,
Oh, when you were talking about how important it is when retail traders come into trading, it's all about the money. It becomes all encompassing and all important, and it becomes so important that it almost seems like, check me if I'm wrong, doctor. If you've ever read the book of Mice and Men, there was a character in there named Lenny who loved little rabbits and mice, and he would pick them up and he would play with them, and he would play with them and love them so much that he would end up killing them. And it almost seems like that's what traders do to individual trades. They overmanage them. That's what they do to their accounts. It becomes so important that the focus is not about making good decisions or how you behave. It's always going to be about the money. It almost seems like caring a little bit less about the money might be what could push somebody with the relationship with money, that's the most important thing, um or over the top, to get them to some sort of profitability, as if they cared about it a little bit less.
yeah. And then the $1 million question is, how do we care about it less? Right? Because we know that that's probably the answer. So how do we get to the point of caring less about the money, and the idea that making money is just a byproduct of good quality decision making?
It
I
seems.
would go ahead, John.
No, no, please go ahead, doctor.
I believe that there's a couple of things that have to happen that regularly occur in all of our trading, no matter what kind of a trader you are. There's a few occurrences that we experience over and over and over that we have to learn to accept in order to get to this place of seeing money as a byproduct. What I'm referring to is the idea that if you get into a trade that you planned, or it's part of your strategy, it's within your edge, it's not an impulse trade, and you did it, the way you wanted to do it, and then you end up getting stopped out. And then the trade goes on to work. It reverses and moves back in your direction. And it could have been a winning trade if you did not have that stop in. And most traders, well, in that experience, will say it was stupid of me. It was a bad trade. It was just, they'll attach some type of a negative valence to that. Whereas if you had your stop and you got your stop got hit and the trade reversed and went back in your direction, we have to accept that A, we didn't have any control over what happened in terms of our stop getting hit and then it coming back in our direction. And B, those were good quality decisions we made. We put our stop in, we didn't change our stop, we didn't lift it, it got hit. So be it. What I'm getting at is we have to learn to accept that often good quality process, like I just described in that trade where we get taken out, but the trade ultimately would have worked. We have to accept that good quality process often means we lose money. The other situation that most traders find themselves in over and over and over that they have yet to really accept is the idea that good quality process can also mean missing out. Like, market's moving, I'm so tempted, I want to jump in and go for a quick ride. And, we can do that, right? And go for a quick ride and make some money. But we know, most people who have been doing this long enough know that you can't build a career out of that, out of impulse trades. And so the idea of controlling our actions and not jumping on that impulse trade. And let's say that trade would have gone on to have made money, but we didn't make any money because we sat on our hands and we're waiting for our setup. Mm-hmm. In my opinion, that's also a good quality process. It happened to lead to an experience of missing out. So those are two really common experiences that we all have over and over and over. Getting hit on a stop, and then the trade reverses back for us or back in our direction without us on it, and missing out because it wasn't part of what we had planned on doing. Both of those situations are examples of good process, but either a negative financial outcome or a flat financial outcome in the second one where we missed out. So the idea here is it's all about detaching those outcomes, the financial piece, right? How much money comes in or out of my account from our process. We just control the process, focus on that, and then evaluate your process more so than the outcomes. Hey, I got stopped. And then the trade worked. Damn, hate that. But You know what? I stuck in the process. We have to realize that was actually good behavior.
Well, and it seems to, I'm sure we all know that if we don't have a process that we stick to, if we don't have something consistent to bring to the marketplace in, your hierarchy of decision making, if we're only taking ones, not all of them are going to win. If we're only taking trades that are going to be in our process, but if we're going to be able to review and get honest feedback from our process, if we're not following the process, we have no consistency with which to gauge.
Mm-hmm. Right. Yeah. And I'll say too that the market being in constant motion, right? Prices doesn't stay in one place for very long, constant movement. And we humans, we are fascinated by movement, and that movement represents potential money. And it is just so easy to get pulled in, and all it takes, we've talked about this before, John, all it takes is just one experience of just jumping in willy-nilly, making some money and having kind of a cool experience, a neat, wow, look at that, I just hit my button and got in and out and made some money. That is such a dangerous type of behavior that most traders, until they kind of accept that it's a dangerous behavior, I'm just going to say it's going to be really hard to succeed.
Well, it seems like that's a behavior everybody has to seem to learn for themselves, even though they can be told it, taught it. It seems as though we always want to put our hands on that hot stove until we finally figure out that it's a bad idea.
Yeah. And then the question is like, how come many people, I'll say, really, have a hard time learning it? And this kind of brings us into all kinds of other issues, right? Which is, well, what does money represent to this person? Do they have other issues around self-worth. Am I deserving of success? Beliefs around money. All of those things sort of are underneath all of this. So which we can get into or not, but that's what's sort of underneath all of it.
I'm looking forward to getting into that. As a matter of fact, I've already got one question that was given to me by a client who's actually a client of yours, doctor. And at this point, folks, if you have questions, if any of this is bringing up questions about yourself or anything, just put it in the question and answer session in the chat, and we'll try and get to as many as those as we can. But doctor, maybe this would be a good time for me to ask this question. It's a guy. His name is Greg. He's taken, your online course and all of that. He's been working with me for a while. He's a really nice kid. He's a good trader, doesn't know how good he is. He says, how can we work through or change our subconscious beliefs about money? Is it it's easy to grow up with negative beliefs towards money, such as money is the root of all evil, rich people are bad, I'm not worth a lot of money, I'm not used to having a lot of money. If we have these beliefs deep in our subconscious, are we prone to give back the money we make from the market? What can we do to get out ahead of this issue so that when we have success in the market, we're prepared and can protect what we have? Now, this is a little deeper. This is kind of where we were headed, right?
Yeah. Oh, yeah. So, I mean, Greg kind of answered the first part of the question himself in terms of are we going to give the money back if we have that kind of those beliefs and those experiences around money really in life? And yeah, I mean, Greg answered it as, yeah, most traders will give it back. Second part, what can you do about it? So there's a lot of things. And first thing I'm going to say is this, there's layers. Think of it as layers. The ultimate deepest layer is really where you have to kind of do some work that can be difficult on your own. But there's a lot of things you can do on your own. For instance, a question you can ask yourself is this: what do I think about other people who have money, who have a lot of money? It's interesting that I've talked with a number of people. Some are traders, some are not traders, just in life in general. And it's always fascinating to me when I hear somebody who talks about wanting to have more wealth and doing affirmations for abundance and prosperity and this or that. And then later in that conversation or in another conversation, I'll hear the same person make some kind of negative comment about somebody who has a lot of money and something about how money is negative or something negative around money. And it always amazes me that people don't make the connection between their perceptions of what they believe money represents to others versus what it might represent to them. So I would just ask people to think about that. What do you think about when you see somebody who has a lot of money or hear about somebody who has a lot of money? Are you envious? Does it frustrate you? Does it, what kinds of thoughts and feelings come up for you? Because if there's a lot of negativity around that, then there's a problem that you've got on your hands.
Doctor, if you have that negativity when looking at somebody who you view as successful and or wealthy, is it a fear in ourselves that if we were to become that wealthy or whatever, we would become that person that we are looking at, like, they're not a nice person or something like that?
Yeah, some people certainly have that as a subconscious fear. Yeah, it's not across the board for everybody, but yeah, I've come across that pretty frequently. The subconscious fear of what you just described. There's other subconscious fears as well around things like not outperforming a parent or not outperforming somebody who you really are close to. There's a lot of kind of what's my financial situation like compared to so and so. We don't think about it consciously, but I will tell you that I've seen this a lot, especially with with professional traders who are doing well, making money. Maybe they're at a hedge fund or something, and then they're at a point where they're kind of bumping up to this income ceiling, and they can't break through it. And what I often will see is we'll kind of go back and we'll look at, well, are you beginning to, or what point did you start outperforming, an important person in your life? And we look at what's happened since that point in their trading. And oftentimes we see a change when somebody starts to accumulate money that is now putting them in a place in their life that's very, very different than what they had experienced earlier. And it's new territory, it's new psychological territory. And many people would rather go back and experience what's familiar psychological territory. And therefore, they find a way to kind of dial back the money to go back to the previous experiences of what money is like, because that's what they're used to.
Is it really that tied to a fear of change? I mean, you would think that making more money or becoming wealthy would be a positive change, but it scares the heck out of people for a lot of different reasons, it seems, but it seems to keep coming back to that.
Yeah, it's partly fear of change is it, but it's kind of putting it pretty broadly. But yeah, fear of change of a lot of different things. Change of, you're going to have different feelings, different experiences. People are going to see you differently. You're going to perhaps have a different play a different role in your family or something. There's going to be changes for sure, and there probably are fear of those changes as well. Increased money also brings with it increased responsibility. And I've also seen a lot of people who say they want the money, but they also have a hard time with responsibility. And so I think for some of those folks, they are finding ways to not accumulate too much money because there's another part of them that knows that they're probably not going to be able to hold on to it anyways. It's an interesting phenomenon that I see a lot.
Why bother or making a bunch of money if you're not going to keep it anyway?
Yeah, I mean, it's not a conscious thing of like, why bother? Should I make money? They're working at it consciously, trying to make money, but subconsciously there's this, I guess we can use the word sabotage, of what we just talked about, and it happens a lot.
So the part of this question is, I'm not worth a lot of money, and it's been always told to me through the years that, if you're in the markets, if you're a trader and you have a certain amount of skill, you can pay yourself anything you think you're worth. So self-esteem becomes a big part of being able to remain successful in this. This is something that I worked with when I was a proprietary trader. I was working with a couple of trading psychologists who were kind of on the books. And, I was never been a particularly handsome, pick 'em up easy kind of guy. I've always been kind of heavy. Self-esteem's always been an issue for me. So in working with them, they kind of recognized that if I didn't kind of build that self-esteem, I probably wouldn't be paying myself all that much. And it was a change, going from an hourly or a salary mentality to owning my own business. That was a change in itself, which is something that we can probably touch on too. But they suggested that I change that esteem issue from the outside in. They made me promise to go work out 2 hours a day, 5 days a week at the gym across the street, and they said that they were going to have spies there. So I committed to that, and if I missed a day, they knew it.
Wow,
And
that's great, John. I wonder if they read my research that I did in graduate school. I did this research showing that if you get in physical condition through fitness, that it actually improves your self-concept and self-esteem and your locus of control. I actually did that with I tested 40 people, pre-test and post-test, with various fitness measures and psych measures, and a 10-week pre and post 10-week fitness class, and saw results. So yeah, it's great. That's great.
yeah, I mean, it certainly made a difference. And hell, I should go back to that gym for 2 hours a day now.
Well,
That was 30 years ago, but a lot changes between now and then.
well, that's a whole other thing, John. Our body is very involved in trading, right? I know we're supposed to be talking about the psychology of money, but trading is not just a mental thing. It's a very much our whole body activity. So taking care of your body, being fit, getting the right amount of sleep, eating, having a good diet, being healthy is a much bigger part of it than many people realize. Um, yeah, so I just had to say that as we're talking about a lot of different things.
Well, it was certainly a physical thing in the trading pit. You're standing there shoulder to shoulder, chest to back with people that are
Mhm.
competing for the same trades. And you realize how much it goes beyond the actual physical
Yeah,
execution. It's a whole body, whole
yeah,
emotion, and whole mental um, job,
yeah,
basically.
yeah. John, I was just thinking, I wanted to go back for a minute, if I may. And that question from Greg. When you teed up the question, you said that, that he's a good trader, or that he's better than he knows it, better than he thinks he is.
Hmm.
Well, I just wanted to say something about that, because it probably describes a fair number of people, actually. And, if, Greg, if you're listening to this, if you're, um, at least a break even trader, maybe making a little bit of money, but you're really, really frustrated. What I want you to understand is that that frustration is probably not what's holding you back. And it's probably not even the problem, because here's an interesting phenomenon that many people don't know. And when I tell people this, it often can become potentially a pivot point in your trading. Very successful traders have the same feelings that unsuccessful traders have. The same feelings, the same emotional experiences, the anger, the frustration, the anxiety, the regret, all the same things. The difference is that they react, their behavior, like that quote that we see from Morgan on the screen, their actions are just different. That's it. So what I'm getting at, Greg, for you is that you may be closer to kind of higher level of success than you think, because if you are thinking that you need to change your emotional experience, that's not actually not necessarily what has to happen. That could be a positive thing for you, for sure. But what really just needs to happen is if you just change your actions in response to those emotions that you're having. And as you do that more and more, you will begin to actually modify the emotions anyways, and ultimately, you know, feel differently. But in the beginning, it's really just about controlling the actions. And many people don't realize that if you are, not where you want to be in trading, if you can recall and remember this, that great traders probably feel not much different than you do a lot of the time. They're just acting differently. They're just acting differently, but they feel the same way. So don't be hard on yourself or belittle yourself or think that you're so far from making it because you have these struggles. All traders, whether they're really successful or not, have the same struggles. Just some traders just react to those struggles differently. That's really what it comes down to.
Thank you for the answer for Greg and for everybody here, Doctor. The mm, the thing that you mentioned about changing your response to the emotions is something that has become near and dear to me. I found early in my career that I was responding emotionally, but with really good timing, but the wrong direction.
Hmm.
So standing there and buying highs and selling lows, just basically FOMOing into these trades. A guy behind me says, "You have no idea how good you are at this." And I turned, and I said, I haven't had a winning trade in 5 days.
Mhm.
He says, "No, your timing is excellent, but your direction is wrong. But when you think you should buy it, you should sell it. When you think you should sell it, you should buy it." Is that kind of changing your response to the emotions that you're talking about? I mean, this is a very
Could
specific case.
in that specific case, it was one example of it. But what I'm also getting at is the idea of, all right, you get into a trade and you define your risk level. Here, you put your stop in, your stop gets hit, and then the trade comes back and works. what I'm getting at is, one example would be, well, most traders are going to be really pissed off if the trade came back in their direction, and they're going to jump, they're going to chase or put on another trade, or just do something that's just out of their, it's just a suboptimal decision. They may get lucky and make money out of that. Oftentimes they won't. Whereas a trader who's reacting differently, they're going to get stopped out, same trade, stopped out, but yet, and they're going to see the trade start to work without them on it. And they're going to have the same frustration and the same regret that that first trader had. They're the same emotions, but they're going to act differently. Instead of like, rushing to make their money back, what they're going to do is they're going to wait for their next setup. That's what I mean by it's their actions. And sometimes the action might be sitting on your hands.
It's wait for the next good trade.
Waiting while you're in the trade to work. Because I saw somebody put a question in there about, being patient for a working trade, or waiting for the next entry. But waiting is an important part of trading. But what I was really getting at is this idea of, we experience regret all the time in trading, and we get stopped out and the trade reverses for us. Man, I hate when that happens. And I've learned that if I can just wait for the next setup, I'm so much better off than just reacting so immediately to that regret.
Doctor, one of the most popular things people ask me about is when they find a level and they put the entry in and they put their stop in and they get filled and the trade starts to go their way. There seems to be a really big desire to move that stop to break even or break even +1, just to alleviate the fact that you're going to be able to take the risk off that trade. And it seems inevitable when we do that the market is going to come back, recheck that level, hit that stop, and then then it's going to trade without you.
Yeah, there's a lot of different styles of trading. That's not how I trade. Some people use trailing stops, some people move stops. There's a lot of thoughts on that, and lots that's been written on that. And that's sort of a style thing. I will also say that people should think maybe more, if you're able to, if you have the capital, think more like a portfolio manager than simply like a directional trader. Think about adding and trimming and risk position, risk posture, and how much exposure, and rather than black and white, in or out, on or off. Think in terms of gray, degrees of gray in terms of this trade. And that's how portfolio managers think, because they're never all in or all out usually. It's shades of gray. So that's another way to think about it too.
So, all right, I'm gonna talk about James here for a second. There are days when I'm in the green with good risk management and feel terrible because I could be so much better in trusting the targets. I'm getting that Greg is not reaching his targets.
Well, boy, I know this is one that I found myself years ago. It was like trusting my targets, trusting the targets. And I had this epiphany that, wait a minute, what's this target? What's this thing that I'm trusting? And I realized that I can never trust a target. It's just a reference point in a chart. How can I even think about trusting it? Where trust should come in, it comes in around ourselves. It's self-trust. I don't trust anything about the market. I don't trust anything about its, supply, demand, support, resistance, target. I don't trust any of that stuff because it can all change in a heartbeat. The market can do anything it wants at any time. So to me, I think when people talk about trusting the setup or trusting like the target or whatever it is, I think that's misdirected trust. I think what people should be thinking about more is trusting themselves. Am I making a good quality decision? Have I assessed the risk-reward ratio? Was it favorable to me? What is the quality of my process right here and now? Those types of things.
So I mean, it becomes more of a trust of your,
Self-trust. Yeah.
yeah,
Believe,
your ability to actually do this.
self-trust, resilience. Yeah. It's, whenever I hear somebody talking about trusting something where the trust is directed at the market or something that's outside of them, will price get to this level? I have to trust that it will. I catch myself thinking that way sometimes. I used to think about it a lot, but I really catch myself now when I do, because it's ridiculous. The market is just, there's constant information coming in and out of the market, players coming in and out of the market, energy coming in and out of the market. There's no way I could trust anything about the market ever. But I have learned to trust myself. And that's a big difference.
Yeah, James is amending that. He says, what he means by targets. I felt like I could, like I took, for example, 600 in profits when it could have been 1500. Well, I think James is talking about the regret, right? I mean, he may
Yeah.
have only risked 200 on that trade, got 3-to-1 reward over risk, which is a good trade. But as it turns out, the trade may have been worth 1500, but there's no way of knowing that.
Well, did this person, bail out of the trade entirely before price reached areas on the chart that they thought it might get to, or what their hypothesis was? That's different than, I managed the trade the way I was thinking I should have, but then it was turned out to be worth a lot
Right.
more. That's two very different scenarios.
Mm-hmm.
So,
and either way, we're gonna still have a little bit of regret at the end of it, right?
well, they're two different scenarios, and there are very different implications with each scenario for a trader in terms of their development as a trader. In the scenario, I'll address one of them. The scenario, let's say this person managed the trade the way they thought they should manage it, but then the thing just kept on going, and it was like, oh my gosh, I could have had so much more money. Well, you know what? That's what markets do, right?
Yeah.
That's what markets do, and if you're having that experience on a regular basis, then you're better than you realize. Actually, um, if you're that's a normal course of business. That's good if you're having that experience. But if you're having the other experience also of prematurely getting out a lot of your working trades and just only grabbing partial profits on many, if not most, or even maybe all your trades, that's a whole nother ball of wax, a whole other set of issues to deal with. That to me is not the same thing as the person who's often experiencing their trades being worth more than what they thought they were. The two different situations, very different.
Maybe you're a better trade locator than you think.
Yeah. Maybe it's time to, maybe you increase your size a little bit. Maybe you stretch out your scaling out, or employ a scaling out strategy for exiting if you hadn't had one before. There's a lot of things you can do.
Chris is asking, he's got to leave momentarily, but I thought I'd just throw this in. But do you have advice on building trust for yourself or within yourself?
Yeah. Maybe start with things outside of trading. I think it can be hard to start in trading to build trust because there's so much, it's hard. It's a hard game. So find something that you want to accomplish for yourself, a challenge in the area of challenging your life that maybe has nothing to do with trading, and see if you can build some trust for yourself around doing that, and see if you can kind of get some momentum for yourself in terms of building the idea of, I said I was going to do this and I did it, self-trust. And then if you have a few experiences like that, think about when you're trading, start evaluating your trading based upon, was I involved in good quality decision making? Because if I was and I got stopped out, I need to recognize that as still high self-trust. I need to maintain my trust in myself in those situations. So when you get stopped out on a good trade, I call it a good trade because you assessed it in terms of your risk reward ratio, you got your stop in, you got hit. That is a trade you need to evaluate as good quality decision making. That will help you to build self-trust for yourself. But I'm going to say, also do it outside of trading. find activities for yourself outside of trading.
Thank you, Doctor. And Chris, it always seems like trust is kind of a self-fulfilling prophecy. If we trust what we're doing, we're going to get good, readable feedback from trusting what we're doing.
Mm-hmm.
If we don't trust what we're doing, we're not going to take the trades that we're supposed to take, and it's going to skew our ability to review what our performance was. Is it a blind trust that you just take all the trades that you think you should be taking and that are in your strategy? There are those that say that would be the case, because you're
Mm-hmm.
not going to find out if your strategy is going to pay you over time, and if you can trust it. But self-trust is always difficult for everybody, in my opinion. This is hard to do, and it's hard to trust the decisions, especially when you're relatively new at it. If you're relatively new at it, it's just hard to be able to think that we're going to be able to find our way through and to be successful at this. It is
Mm-hmm.
difficult. Everybody wants
Mm-hmm.
to.
Yeah. And it typically takes longer than most people assume it's going to take, right? People come into this thinking it should be instant, because of course we all read about the guy who made, instant amount of money. So,
Well, it's quite often that it takes 10 years to become that overnight success.
yeah, right,
Right.
right.
So Mark is asking, one of my biggest challenges with the trading combine is reaching the profit target. I'm able to maintain consistency until I get close to the profit target.
Mm.
And the end of the combine, when I start feeling frustrated and begin making mistakes. Do you have any advice on how to overcome this? I think he's got the target blues.
Yeah. So if I'm not mistaken, John, I think the combine is such that there's no time limit on it, right?
Correct.
Okay. So here's my advice from Mark, and this is going to be um, for anybody really. But if you're in the situation that Mark's describing, you've been able to maintain consistency, you're getting close to your profit target, nearing the end of the combine, and you're beginning to feel frustrated, what I'm going to suggest is take a break from your trading. Because there's no requirement that you have to achieve that number, that target by a certain date. There's no calendar requirement hanging over you. So what I will say is step away for probably a couple of days, maybe at least a day. And I'm also going to say many people won't do this, but those who do stand a really good chance of coming back to the market with a bit of a reset. I would probably say I would take at least a whole day, maybe even 2 days. And the market's always here, right? The market's not going anywhere. And if you're in that place of, I'm frustrated and I'm nervous, and will I get here? And we have to recognize that's not the best version of ourselves, right? We're not bringing the best version of us to the trading game. So that is a great reason to sort of say, you know what, I'm going to step off to the side here for a little bit, reset, and then come back.
Excellent advice, Doctor. One of the things that I always suggest is, when somebody comes and says, I'm going to finish the trading combine this month. So they're putting a time-based goal and a profit-based goal, and nothing is going to take you out of your strategy faster than that.
Yeah, I mean, either one of those is bad, time or profit-based goal, but when you have them both, oh my gosh, that's a complete recipe for, I would say, not failure, but it's like really hard to deal with that.
Yeah. So Mark, I would, like the doctor says, in trading in the pit, when I finally started to make some money, I would be able to put together a string of days where I was profitable for a string of days. And then I would start to feel the pressure of keeping that streak together. And the day that I started off with a losing trade was the day I would give back most of the 6 or 7 winning days. And it was just that pressure to keep that winning streak going. So
Yeah.
I just, I was working with psychologists at the time, and they said, well, you just need to break your streak in your own terms. The next time you start to feel that pressure, take a day off, come
Mhm.
back the next day, and there's no streak to hold up to.
Right.
Just
Yeah,
streak of
I've
none.
done that. Another thing that I've done for myself, I mean, because I'm not managing other people's money, so I'll just take a withdrawal out of my account. If I've had 3 or 4 or 5 good days, I've got like my account is swelled up. I will take some of that money out, and then I come back and I look at my screen. I look at the brokerage account, and it's like, oh, okay, well, it's not as high as it was before. So it's sort of like another way of doing a reset, and it also makes the money real too when it's not in your trading account. So I've learned
Absolutely.
that years ago, and it's a really integral part of my kind of self-management strategy for myself as a trader. So I wire money out. And in the past, it used to be like, oh, let's do this once every so often, like a month or a few weeks or whatever it was. And I started to realize, oh, wait a minute, I'm falling into this whole, calendar thing about I want to make X amount of money over X amount of time period, which is, as we know, doesn't work in trading.
Mhm.
So there will be some times where I make frequent withdrawals and other times where it's like a long time till I get to make a withdrawal. And I have no idea. So I just let it, it's just an open thing for me.
Love the idea of making it real. Very important. And
Yeah.
then, when your account is swelled, it does kind of get your head.
Oh,
It makes your head big. You start taking bigger and maybe some riskier things, and that you shouldn't be doing.
yeah, that was my thing for sure. I mean, I can be definitely a risk taker. That's my Achilles heel. I can be way more on the risk side of things. So I learned, that I have to take money off the table when I've been making money because I will give it back if I don't.
Yeah,
So that
better to
was a pivot point for me, big time pivot point. My
better.
wife, my wife really liked it too.
I'm sure. Better to take it out than to. We traders love to take out checks. We don't like putting in checks.
Mhm.
It's far too painful. So
Yeah,
there's some sort of a balance there to just to keep this much in your account and the rest you take out. And there are a lot of people on the trading floor. We had 50,000 in a T-bill up with the clearing firm, and then we'd have 10, 15,000 in the trading account. And every Friday you took at least half what you made that week, provided you made money, at
yeah,
least half that money out on Friday.
yeah, yeah. Great way to go. Yeah.
So okay, what do we have here? Bill is saying excellent session, really struck home, describing my issues, and I will change my approach and morning plan. Thank you, Bill. James, again, is there any psychological difference between going long versus short as a trader? I seem to have a lot of hectic relationships on the short side. James,
Yeah. What was the last part? I know heard the first part about difference between long and short, but what was the last part of the
he
question?
seems to have a lot of hectic relationship on the short side, so he's certainly got
Hector.
a long bias.
So he's got a long bias. Okay. Um, so trying. So this person, it sounds like this person has a hard time taking shorts. Is that what they're saying?
Yeah, I think that's what he's saying is going his psychological difference between going long versus going short as a trader.
Yeah.
This is his words. He seems to have a lot of a hectic relationship on the short side. I don't think that he prefers the short side.
An
He said
interesting
going
choice.
short feels more like a crapshoot, he says.
Yeah, hectic relationship on the short term. That's an interesting choice of words. It's
It
kind of
is,
cool.
isn't it?
Yeah, it's interesting. It's making me think. So, well, I'll just say two parts to this question, right? The first part is there a psychological difference for just general for all of us as humans? Yeah, there's a difference, but then there's also a difference to you, to the person who asked the question that's unique to you. So the broad difference, the general difference for all of us is that um, markets tend to go up more than they go down, right? We know that, whether it's 70, 75%, whatever it is, they tend to trend up. So we're used to that. That's a pattern that the brain is used to. When that pattern breaks, there's areas of the brain that have a reaction to any time a pattern breaks. And oftentimes with that reaction that we'll have and that neurological reaction will be tinged with a lot of anxiety. And so what happens is, this is partly why, I think, John, you probably remember this from the days on the floor. I think it was the old expression, stairs up, elevator down.
Hmm.
Price tends to move down faster because people don't expect it. Maybe the pros on the, some pros do, but the average person doesn't. They're expecting it to go up because markets do trend up. So when it doesn't go up, it's sort of like a violence. It's an experience of violence for many people, literally like psychological violence. That's why that word hectic kind of got my attention.
That's it too. It is.
Yeah,
It's
yeah,
like violence.
yeah, exactly. And that's that's the deal. And so now this person may have there's probably other things going on. And I will say this before I'm not going to really maybe address the idiosyncrasies of this individual's dynamics around long versus short, because I don't know anything about this person, but I'll talk about somebody who I do know very well, a coaching client of mine who's a very good trader, individual self-directed retail trader who's now pulling in a nice, pretty substantial 7-figure for himself, doing very well. But he does not take any shorts. There are some days he doesn't have any trades because he's only waiting for longs. That's all he does because he knows his bias. And so he plays to his bias. And there's lots of times where he doesn't have any trades at all. So there's another, of course, if you're positioning yourself, or you see yourself, or you're fashioning yourself as like a intraday, trader, scalper, looking for short moves, then you might need to be able to learn how to go short. But if you're someone who's more like on the intraday swing side, like me, I'm looking for just 2 or 3 trades in a day per market, maybe only 1 or 2 in that market, but any more than 3 or 4, I'm probably over trading that market. Mm-hmm. That kind of trading I think for that kind of style, you can only go long. Now I do short and long, but I'm suggesting that it's very feasible. And I've known some really successful traders, like this one guy I'm thinking about right now. I can see his face right here in front of me. Very successful. I don't think he's had a short in a couple of years, even though there's days, obviously, in periods where the market goes down, and he does lose money at some periods. But overall, he plays to his strengths. He knows what he's good at.
There it is again. Play to your strengths.
Yeah. Yeah.
All right. Thank you very much for that answer. I think even though my dad was a trader for 40 years, when I got my job on the trading floor, it was very difficult for me to wrap my head around the idea of short positions. Mm-hmm. How do I sell something that I don't own? Yeah. Right. And I've experienced that a lot with other people. And mm-hmm. My dad just had to say, well, it really doesn't matter what you do first, as long as you do the same on both sides.
Right. Right.
So if you think the market's going lower, you sell first and you can buy it back later. And as long as you're even, you've made that money. Oh, okay. Now I get it. And I think that's part of why perhaps some people do tend to have that long bias. Now, on the trading floor, there was a big short bias because the professional traders on the trading floor knew that the money came faster. There was a guy, Don, that used to say the longest he'd ever been was short 10.
It's funny, John. All the coaching clients I work with who are former floor traders, every single one of them had a short bias that they said they wanted to work on changing that as they were becoming a screen trader. Every single one of them.
And the one trader that I mentioned before that was all about the decision-making process. Yeah. One of the things that he counted for his success was he learned how to buy them. Mm-hmm. He learned how to trade long.
Right. Right.
So everybody seems to have a bias one way or another, whether they realize it or not.
Mm-hmm. Mm-hmm. Yeah. Yeah.
Well, Doctor, I think we're coming around to an hour here. Hopefully everything was good. There was one thing from MK. I wasn't quite sure where the question was. He says, clues on sticking point reversal. Last 2 years, I made money approximately 55,000, but can't really make meaningful progress. I think he was kind of talking about the glass ceiling. He had gotten to a point he couldn't get through it.
Boy, there's a lot. I'll just throw out some possibilities for MK to think about because I don't know MK. I don't know which of these issues could be present, but was it an issue of not a good kind of a confluence between your style of trading and the market? Or was there some other change just within you that was causing you to see things differently? Is there also an issue around money? Maybe this 55,000, what is that? Is that a number that is meaningful to some degree? I would think about that. Is there anything in the family or your history, anything about that 55,000 that has any meaning to it at all? So there's a lot of different possibilities here, and it could be, method, style, strategy related, money related. There's a lot of different reasons for this phenomenon, which is pretty common actually.
Do you think it could be the speed limit?
Yeah, right, exactly. Like I'll never forget, a couple of years ago, I had 2 years in a row where I made almost to the dollar the exact same amount on my trading. And it was really strange. And the market sort of really, it was like, and I thought for sure I was doing better the second year, but I wasn't. So I looked at my results. It was really kind of odd how that happens.
Didn't want to outdo the previous year.
Yeah, I'm not quite sure what to make of it for myself, but it was it was a very interesting experience. Just goes to show you how much psychology is involved in the money.
What is it? 70% of success in trading is psychological?
It's whatever you think it is, but yeah, I tend to think it's a lot.
I would agree with that. And by survey, 10% of the energy is put into psychology and trading.
Exactly. Yeah. People, they come to these, discussions you and I are having, they read some books and they think they're attending to the psychology part, but it's really more about, can I allow myself to feel the regret without acting out on it? Can I allow myself to feel the FOMO without acting out on it?
And there it is.
That's the work. Yeah.
It's a lot how you behave.
Yeah. Yep.
Well, money management, if you can't manage money, making more isn't going to help.
Exactly. Yeah.
Doctor, thank you very much for your time today. Another month we'll be back, and I always really enjoy the opportunity to chat. After the close, we can kind of sit back, relax, have a Diet Coke, and just talk about the subject at hand. We really appreciate it. I love you, doctor. We all do. Good luck in trading for the next month. And I look forward to talking to you again very soon.
Thank you, John. Take care, everybody.